In this video we are going to talk about dividend stocks with a high yield. So before starting this video, please like this video and subscribe to this channel for our future updates. As we turn the page on the year 2021, it is clear that it was yet another successful year for the stock market. Overall, the S&P 500 should end the year with a gain of almost 25% if current levels hold for another week or so. While this is unavoidable, it is apparent that many investors are beginning to consider taking a more defensive stance in the coming year. Price inflation and interruptions from Omicron aren't the only concerns. There's also the harsh fact that after 31% gains in 2019 and 18% gains in 2020, it's possible that equities may not have another stellar year ahead of them. Because even though the year has come to an end, you may be concerned about your portfolio's future performance. You may want to consider some of the dividend stocks listed below, which provide stability and income, and could serve as a solid foundation for your portfolio regardless of growth trends in 2022. Bernstein Holding LP, ticker, AB. Bernstein is a New York-based asset manager that has made a name for itself since its founding in the 1980s. The firm provides research and investment services to high-net-worth individuals and institutions, including corporate and government pension plans, trusts and estates, and businesses that provide 401(k)s and other benefits to their employees. On top of taking advantage of favorable market conditions recently, AB has also taken advantage of widespread concern following the coronavirus outbreak, which has driven numerous institutions to seek professional financial counsel. Earnings and revenue are increasing at a steady pace, and the stock has beaten the market in 2021 while also providing a considerable stream of dividends to owners. Camping World Holdings Incorporated, CWH. The $3 billion investment is more of a glamping, or fancy camping, experience than a regular camping equipment purchase. CWH is the largest recreational vehicle dealer in the United States. Small pop-up campers and full-size rigs, which are effectively mobile holiday houses, are examples of this type of vehicle. As an aftermarket service, the company is pleased to provide upmarket furnishings, flooring, window treatments, generators, and other creature amenities. Camping World expects revenue growth of more than 20% in fiscal 2021, fueled by the social distancing phenomena of 2020 and sustained enthusiasm in outdoor living this year, according to the company. In addition, it pays a substantial 50-cent quarterly dividend, resulting in a yield of more than 5%. Chimera Investment Corporation, CIM. Chimera is structured as a real estate investment trust, or REIT, despite the fact that it does not own any real estate assets. Instead, the company invests in a portfolio of mortgage assets, which consists primarily of residential mortgage loans, according to its website. Due to the fact that CIM is taxed as a REIT, however, the company is exempt from federal corporation income taxes for the period in which it distributes at least 90% of its taxable revenue to its shareholders. That implies a mandate for large payouts, and, as a result of a booming mortgage lending market in the United States, the stock has increased 40% so far in 2021 and continues to show great momentum as the year draws to a close. EnLink Midstream LLC, ENLC. ENLC is a $3 billion pipeline firm that is engaged in the transportation, processing, and storage of natural gas. ENLC is a midstream energy business that is involved in the transportation, processing, and storage of natural gas. Among other things, it maintains over 11,900 miles of pipelines and 22 natural gas processing units, as well as barges, rail terminals, trucks, and other equipment. This is due to EnLink's unique business operations, which are protected from direct energy price swings and should benefit from an increase in demand. EnLink is one of the best-performing companies on Wall Street this year, thanks to its unique business operations, which are insulated from direct energy price swings and should benefit from an increase in demand. As a result, the company will pay a large dividend and make significant gains of more than 60% in 2021, implying that the company will continue to gain pace in the coming year. EPR Properties, EPR. EPR is another REIT in the same vein as Chimera. But in fact, this is a more traditional real estate company, as it manages commercial buildings under a triple net lease structure, which means that in addition to rent, renters are required to cover all of their own expenses such as utilities, taxes, upkeep, and other comparable costs. With tenants that include ski resorts, theaters, and amusement parks among others, that make up its almost $7 billion portfolio of properties spread over 44 states, EPR provides services to the entertainment industry. However, despite the fact that there is some uncertainty around these firms as a result of the Omicron variation, the 35% gain in EPR stock year to date suggests that investors do not expect operations to come crashing down anytime soon. And as long as the tenants continue to pay their rent, the Dividend stock will continue to pay its dividends to its stockholders. Exxon Mobil Corporation, XOM. Exxon has returned with a vengeance in 2021 after falling out of favor in recent years. There are two major reasons for this resurgence. The most obvious reason is that rising energy prices, along with rising global oil and gas demand, have produced significant results, with revenue expected to increase by more than 60% over the previous year. However, it is worth mentioning that Exxon's significant investments in cleaner alternatives to fossil fuels are beginning to bear fruit, as seen by the company's Strathcona Renewable Diesel project, which is part of a strategy to produce more than 40,000 barrels per day of low-emission fuels by 2025. Despite the recent rally, shares remain significantly below their all-time highs of over $90 set back in 2017, and investors may still take advantage of a fantastic dividend yield because shares are trading at a discount to their all-time highs. Lumen Technologies Incorporated, LUMN. Before becoming Lumen, the company was known as CenturyLink. It has approximately 4.6 million broadband internet members and a legacy phone landline operation that, despite all odds, continues to earn a respectable amount of revenue. This is due to the fact that some rural areas continue to experience unstable service. Lumen has made significant efforts to extend and remain relevant beyond its traditional telecommunications network, including a number of acquisitions that have targeted digital services, the most notable of which was a $25 billion acquisition of Internet Service Provider Level 3 in 2016. However, despite the fact that Lumen is a little company compared to industry heavyweights such as AT&T Incorporated (T) and Verizon Communications Incorporated (VZ), it still has plenty to offer dividend investors in 2022. Prospect Capital Corporation, PSEC. The stock of Prospect Capital, which just made an appearance in U.S. News as one of the top monthly dividend companies, is a triple threat, offering a large distribution as well as monthly dividends as well as a significant 2021 gain of over 50% this year. Additionally, solid fiscal first quarter earnings were reported at the beginning of November, including a significant earnings beat in good investment income. This bodes well for the beginning of 2022. PSEC, which operates nearly like a publicly traded counterpart of a private equity fund, makes money by investing in small and mid-sized businesses across a wide range of industries and generating profits. Those investments have paid off as the economy has had a resurgence this year, and there is reason to believe that trend will continue in the future. Sunoco Lp, Sun. Sunoco is a well-known brand in the United States because it is a large distributor of retail motor fuels with a value proposition that is unbeatable in the industry. Yes, there is a greater emphasis on electric vehicles, but EVs account for a minuscule proportion of the total number of vehicles on the road, and hundreds of millions of Americans continue to go to and from work and the grocery store in the traditional manner, with a combustion engine. At its branded convenience stores, Sunoco also makes money through food service and novelty sales. The company also provides distribution services, which connect independent refiners with local partner stations, among other things. It's not a flashy business, but it's a dependable one, which means it pays out consistent dividends that investors can put their money in. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.